You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
All right, everybody. That rockin' tune means it is time to rock out once again with the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as the old network. Did you miss us? I missed you guys. Did you miss us? Yeah, we were down last week for the big options industry conference. If my voice is starting to crack a little bit, it's because I've pretty much been talking for pretty much the last week straight. You got a little bit of a glimpse of it so far on the network, but there's a whole heck of a lot more coming your way. So stay tuned, buckle in for all of that goodness. We chatted with a whole slew of great people from across the spectrum of the options landscape. You want to know maybe why we don't have live options open interest? I hit that for you with the CEO of the OCC. Maybe you want to know what the industry icon like Thomas Petterfee, what he thinks about a variety of issues and hot topics of the day. Well, I did that one for you, too. You want to talk about all the latest going on in the world, maybe the tech side, the exchange side, the brokerage side. We hit it all, and it's all coming your way on the network pretty much as we speak. My audio guys hate me this time of year because I really overwhelm them with a lot of content, but it's all for you guys. It's all for love. So it's all hitting the network pretty much as we speak. Stay tuned. If you subscribe to the full network, you'll get it all. If you just listen to the Option Block, then you're going to have to go subscribe to the full network or go subscribe to our Options Insider Radio. That is indeed our interview show. And you know what? We even have an extra special surprise bonus for you. We do not really a surprise. We do it every year, but in case you're new, we also pulled all of the panel audio for you, including my debut as the host there for the hopefully annual now Crowd of Fame Awards. We gave out 10 Lifetime Achievement Awards to a variety of participants from throughout the world of options, including our good buddy Tony Saliba. He's going to be in here tomorrow in the studio to chat about that and quite a few others. That was that was an honor and a privilege to do that, and I think it was pretty well received. I think it looks like that's going to be happening again in the near future, which is a good thing because one award doesn't really encompass the broad spectrum that is the options world these days. So stay tuned for all that goodness, the panels, the radio. And if that wasn't enough, I need to save my voice because in a couple of days we're doing it all again. The trading show is coming to Chicago, and they roped us into doing a whole bunch of more shows. So it's going to be a lot of great stuff coming your way. Just buckle in. Just take the app, take wherever you get our stuff, take the network feed, your podcast app, sit down in a nice quiet corner, put the headphones on, and dial in because there's a lot coming your way. So stay tuned. And helping me today to carry the load, because I've been talking a lot lately, we got a good crew. Let's go in reversed order. Let's go out to the land of the Fidelity Hot Seat. We gave him a break last week. We actually had Greg in doing the show, so check out that one. I'm sure you guys probably already have on the network. We did kind of one of our live from OIC special editions. Those are kind of fun. But holding down the hot seat this week, once again, Colin Songer from the Active Trader Strategy Desk. Colin, welcome back to the show. We gave you a nice rest, but now it's back in the hot seat, sir. How do you feel?
Feel like it's starting to warm up. Just kind of like finally getting view of there is a sun up here, believe it or not. So good to see that, along with a little volatility, I guess, showing up today.
Yeah, a little volatility rearing its ugly head, and we're talking vol. Let's talk to the greasy meatball, Mr. Meatball. Mark Sebastian, how you doing, sir? How you liking this return of volatility?
I am unimpressed, I gotta say. You know what? So what's interesting is the VIX is 16.5, and we are above the close of Thursday. We were down. We were up more on Friday than we're currently down. It is kind of nutty the way vol's moving around. I think once we figure out what's going on with China and the China delegation, things will change. But I fully expect I would be less than shocked if we get stronger at the second half of the day and we end up close to unchanged. This seems like the mehest sell-off that I've seen in some time. Frankly, I'm surprised by the big VIX pop. I'm not sure it's actually necessary. It's just it's funny the way everything is kind of worked out, but I'm unimpressed. I'll say that.
I am not impressed, says the meatball. We'll get into all that, but first, let's get joined by our final compatriot, our partner in crime. He also had a little bit of a break last week. Uncle Mike, sir, from St. Charles Wealth Management. Did you miss us? Did you miss option blocking?
I what's not to miss? I mean, you cut me off for the second show of the week. I mean, I'm all full of things to say, and I had to hold it all in over the weekend.
There you go. Now you got your chance to let it out as we get on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, let's get trading. Time for the trading block, the portion of the show we break down, the name says it all. What the heck is trading? And as we alluded to, I guess the administration, Mr. Trump, was not exactly. He thought the markets were too quiet, too complacent. He thought VIX cash hovering around the 13 handle wasn't too enthusiastic for his taste, so he decided to jazz it up, injecting a little bit of, shall we say, more volatility into the trade talks, and as a result, spooking the markets and giving us a little bit more vol back in the space as well. As we're coming into showtime here, the NASDAQ leading the charge to the downside, off about 1.1%. The S&P right in the middle there, off about 1%. And the Dow off about 0.9%. So all of them feeling the weight of a potential increase to the tariffs coming at the end of the week. There was talk China might pull out of the talks now. As a result, it seemed like they've backed away from that a little bit. So maybe cooler heads are prevailing there. But still, just when we thought, the market was rallying, just when we thought we were out of the woods, we can focus on micro again as opposed to macro. The tweets come in and it changes everything. VIX cash today feeling a little bit of a boost. Up about over 3.5 handles now, at about 16.5. So we were flirting with that 13 handle all of pretty much the last few shows. Now we're back in the 16 range. Haven't been up there in a little bit, so it feels fresh and new and different, which is always fun and enjoyable. Let's go back around the horn, the opposite of the way that we started. Let's go to Uncle Mike. Uncle Mike, sir, in this day of sell-off and indeed a little bit of vol creeping back in, what is catching your eye, sir?
Well, what's catching my eye isn't necessarily this day of sell-off. It's this last night of sell-off. If you look at the futures, the S&P futures were down, I believe, around 60 points almost instantly at the open at 5 o'clock Chicago time last night. So I think that ultimately when the news came out about these tariffs, this was just a kind of just a scare of the market, and that there was just a lot of reaction selling, and that it really wasn't necessarily anything that's too overly shocking, but it's something that's definitely shocking. The other thing to point out is that when you say it, like I was just talking with a client this morning before the open, when the market's down roughly 1%, it doesn't sound like that much. But when we look at it and say the Dow is down 300 points, the S&P is down 60 points, it really sounds like a lot more than it is. Now, granted, it is close to 2%. It's nothing to be laughed at by any means. But the point is that with the S&P being at the higher levels with which it is now, as opposed to 7 or 8 years ago, when we have this big of a move, 30 points isn't as much as it was 8 or 9 years ago when the S&P was significantly lower. So that's the other thing that I'd like to point out with this. Yes, it is a move today, but we're around a 1% move, which really is not too majorly significant in the grand scheme of things. With Mark even saying that he wouldn't be surprised if we ended up bunched on the day, it's not that much of a stretch to expect that. So what I'm seeing from this is that it's obvious that this move, or at least it's obvious to me that this move has a lot to do with the news of the tariff talks. But the other thing is that if this is all the move that we're going to get, then it feels like a big move because we're used to just being up 20 points on the day, or we're used to moves about that size. But if this is a big move, then we don't really have that big of a moving market. And then also combine that with the fact that the VIX, I believe it got up to 1880, I think is the high of the day. I think this is very reactionary out of fear of what could happen, but it looks like things are calming down a bit overall from where they were last night. So it's going to be interesting to see how this plays out the rest of the day today. But overall, if this is a big move from a scary thing, I really don't think this is that big and that scary.
Not feeling so your clients aren't calling up panicking, saying, "Uncle Mike, roll my puts, do something, get me out with it." They're not freaking out.
No, I mean, like on Friday, for example, I was in a put spread last week, and I mean, maybe this is more of a strategy block type thing, but I was in a put spread, a short of put spread, and I didn't hit my profit target on it as of yet, but I was very close to it. But I'm thinking, you know what? I'm not going to take on the weekend risk for these few pennies that I'm in, so I just got out of it on Friday afternoon. It's just not worth it. What if there is a 60-point downturn in the marketplace? And I mean, thankfully I did, but I think that when looking at these, that's an example of, even though if I were to would have had a gun to my head going into the weekend, bullish or bearish, I would have been dead wrong and said bullish. But I just want to emphasize once again that risk management needs to trump your indicators 10 times out of 10, in my opinion. So, and that's just another example of how risk management, it actually can work.
And Mr. Meatball, you were saying before, you are not impressed, if I could redub your words there with a fun accent. But you are not impressed by today's sell-off. What else is catching your eye out there in today's activity, sir?
You know, it just kind of, everything's kind of poopy. The semiconductors are getting smoked. They're down. That's really what's leading everything. They're down 2.5%. Everything else is down, 1% or less. But they are absolutely punching names like AMD, Micron, and AMAT. They're all getting punched in the face.
Sometimes a name could use a good punching in the face, especially if it's up quite a bit. A little bit of relaxing. Or aggressive relaxing, shall we say. Sometimes not the worst thing. Colin, what is lighting up the tape over there in the active trader land for Fidelity?
Yeah, so a few things that our customers seem to be trading, which was already mentioned, one of them being Advanced Micro Devices. That's actually was number 3 on the list with, as you said, semiconductor sector really getting beat up here. So it actually is trading opened up down below its 20-day moving average, which is typically used as a proxy for short-term trend analysis. So interesting enough, it's down just under around 3.25% down over 1.06 down so far today. Interesting enough, TVIX made the list, which is a little bit unusual, but it makes sense, especially when we're seeing that volatility pop there. So that is the velocity share is 2 times VIX short-term futures ETF or ETN, where it's up 17.75%, so 3.43 it's up so far today on that volatility jump. And then last but not least, Boeing. Boeing's making the list as well, trading at 370.53, down roughly about 6 points, down 1.6%. So a lot of that dealing with concerns over the tariffs, so being impacted from that, as well as, once again, those concerns about the 737 just seem to be lingering over it. So those are what's really hitting the tape here so far by the Fidelity customers.
There has been a dark cloud lingering across the street there at the Boeing HQ ever since all of this began. And it doesn't seem like it's lifting anytime soon now with news that they're readjusting a number of human inspectors to go towards automation. A few folks thinking maybe not liking that, given the safety hasn't exactly been up to par over there of late. Let's see what's up to par here on the volume front. Coming into showtime here. Let's see, we ran the numbers. So these are a little bit earlier. They're probably a little bit higher now. But let's see, VIX obviously was lighting it up today. The ADV out there right now is a little bit shy of 500,000 contracts, about 472,000. And there was already about 430,000 on the tape well before showtime. So chances are probably blown past that now, which is a good thing because VIX has been languishing, shall we say, in the lower end of the volume spectrum recently. So maybe a few days like today might bump that ADV up to, dare I say it, over 500,000 contracts. Shocking. SPY also lighting it up, about 1.75 million contracts on the tape. The ADV about 2.25 million. So chances are it's going to beat that today as well. SPX, same deal, about 710,000 contracts. ADV a little bit north of 1 million. Qs, 412,000. ADV about 625. And the Russell, a.k.a. IWM, 216,000 contracts on the tape. ADV 285. So most of the major indices doing pretty well. Let's look really quickly. I have these from a little bit earlier, but what if I pull it? Let's pull a live most active, courtesy of our buddy, the Flowmaster and his group. We chatted with him down at OIC as well. Look for that here on the network, listeners. And as we pull that up live here, let's go top 10. Number 10, Microsoft, 102,000 contracts. Number 9, Micron, $104. Number 8, Disney, $112 on the tape. Number 7, Amazon, $127. Number 6, Bank of America, 134,000. Number 5, AMD, $159. Number 4, good old Facebook, $160. Number 3, Tesla, getting up there again, 201,000 contracts. Number 2, Baba, 202, and leading the charge yet again, Apple, 350,000 contracts. Let's look here really quickly. The most biased flow we're seeing today is in Disney, actually, 75%. Mr. Meatball, I know you have a lot to share about Disney in a little bit. You kind of looking at it maybe as one of your stocks, your picks of the week. So maybe we'll talk about that in a little bit, and maybe in the odd block. Maybe we'll kick it off there. First, though, since we're talking numbers, and I did just come back from the OCC conference, a.k.a. the Options Industry Conference, put on by the OCC and OIC. Let's look at the numbers from our friends from OCC for April. They're in now. And spoiler alert, down yet again. April down 5% volume-wise from 2018 this time last year. We hit 385, almost 386 million contracts. That's down about 5% from April of 2018. Year-to-date ADV, about 19.2 million. That's down nearly 13% from last year's numbers. Let's dig it in a little bit more. Equity options, about 345 million contracts. That's a 3.2% decrease from this time last year. Cleared ETF options volume, about 124 million contracts. That's a 24.5% decrease from this time last year. Index options volume down nearly 16% to about 35.5 million contracts. And let's see, futures. Also, futures has not exactly been a bellwether of late, and that continues to be the case. About 5.5 million contracts in April, down nearly 25% from April of 2018. So pretty much down across the board. You guys were saying at the beginning of the year, I was hoping you were right, but I didn't think it was going to be the case. Everyone was saying, all the industry polls, folks who polled, all the people you guys polled out there too, a lot of you saying we're going to blow the doors off 2018's numbers. And so far here now through April, it does not seem to be the case. ADV down nearly 13% from this time. So it's going to take a few VIX-ocalypses and a few other things to turn that volume worm around. And I don't know if the market really needs or wants a few more of those in its back pocket. Let's see here. Let's keep on rolling because there's a lot of fun stuff to talk about here. Actually, we'll get to really quickly a quick preview of earnings. We'll get to more of them a little bit later in the show, but it is another hot week for earnings. Let's see some big names popping off this week. EA on Tuesday, Electronic Arts, Lyft also on Tuesday. We've got today, after the bell, Hertz, Disney on Wednesday, and a bunch of other names. Marriott, JD on Friday, Yelp on Thursday, a bunch of other names. Oh, and Uber scheduled for the 10th, Friday the 10th, to go public. So they're not going to let Lyft have all that fun. They're going to get in there as well with a little bit of Uber, and we're going to get in there as well with a little bit of the old Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we get weird. We're going to get a little bit weirder today, too, because we're kind of mixing in, trying some new flavors, trying some new things, and the Meatball was thinking about, what about something fun, like we pick apart maybe a name, a stock of the week, something along those lines. So, Mr. Meatball, you have our inaugural victim for our first kind of pick kind of name. This is not what we're recommending. It's more just like, let's talk about it, because it's doing some stuff. So what is our first victim this time, sir?
Our first stock of the day is going to be Walt Disney and Company.
Never heard of it.
Otherwise
Try again.
known as Disney.
I was thinking something Pink Sheets.
Yeah. So this is a pretty big one in that there's, for a bellwether company, there is a ton going on with this name. And that's what I think it makes it so fascinating. Like a Boeing would have been interesting, like a Kraft Heinz would be interesting. But, I wanted to go with something that's interesting because it could go up, not interesting because it could go down. And, my wife and I, big blonde hair, and her social media manager, debit and credit spreads, the three of us were in an argument about, Disney.
Her social media manager, his name is debit and credit spreads.
Her name is Odette, but we call her Debit and credit spreads.
Oh, okay, that's a very inside baseball joke, sir.
He goes, it's really just me. We've been arguing because I'm like, Disney streaming service, especially because they're going to own Hulu, is a real threat to the mantle of Netflix. And what Disney really is an interesting merger of what Netflix was a couple of years ago in terms of growth prospects and the mature company that is the parks and the movies and Disney Channel and ESPN. And, that combination has caused Disney to absolutely explode higher in the last, call it, 2 months. At the end of the year, it was around 110. It's at 135. It's up $25. It is outperforming Netflix in terms of its rate of growth. Netflix, for its part, really hasn't done much in the last, really since the beginning of the year. Netflix has really not gone anywhere. So it's interesting that the way the two of them are Disney is Netflix but already owning most of the content that they need. I mean, let's not forget what they own. They own Fox, they own Star Wars, they own all of Marvel, they own the Muppets, they own Disney.
Pretty much everything that is cool and fun, they pretty much own. Yes,
correct. As I follow more Muppet fan clubs on Facebook than I do stock clubs.
As we all do, of course.
We all should, right? Though everyone knows Muppets are far more interesting than, I'm a fan of the actual Muppets, not Goldman Sachs Muppets, if you will. So it's a really fascinating name, and they have earnings this week, and there is a lot of volume today. It is moving around. And if we look at the stats today, let me get the stat sheet up. Disney has the average volume has been about 170,000 contracts. Today, about 90,000, and it's been a lot of near-dated stuff. The the puts, calls, you name it, all over the place. I'm sorry, I'm looking at Netflix. That's wrong. I meant Disney. Disney, the average volume is about 135,000. They've already done 112,000 today, and there has been really aggressive upside call buying ahead of earnings. Biggest trade of the day is the May 145 calls, buyer of 1,800 of them for 33.
Yeah, they're loving themselves some near-term upside. Looks like earnings paper to me, sir.
So, now that I've kind of said my piece, this is something I wanted to be kind of a discussion point. I'm saying Disney is going to grow like Netflix, while Netflix doesn't grow like Netflix anymore. That's kind of my baseline argument. I don't know, Mike. What do you guys think?
Tusaw, do you have a thought on Disney? Otherwise, I shall pontificate, sir.
Yes, for Mark.
Many thoughts. Yeah, no, Disney is a holding of ours. In the strategic night, we do believe over the long haul with Disney, we think that there's a lot of good things that could happen with it. Especially, me personally, I think it was a great move for them to take on Star Wars like they did, or to take on the Star Wars franchise like they did. It's had quite the run lately. And so there's a lot of things that are going on with it. In terms of Netflix, it's like the old adage that if you don't necessarily have to be the best at something, you just have to be first. And Netflix was definitely the first to make a name for themselves in doing what they do. But I'll be honest with you, from a personal level, I canceled my Netflix subscription because we don't even use it that much. And for the $10 or $12 a month, for even that to not be worth it to me, we just didn't use it. What we're typically using is we'll go to if we want to watch a movie or something along those lines, we'll go to Amazon Prime or something like that. So I can't say that I'm really bullish on Netflix at this point from that standpoint. But Disney, like you said, Mark, it's an interesting marriage from a very mature company and a company that's trying to do some newer things.
Yeah, it is very interesting. They have so many moving parts, and so many of them resonate. Look at the Avengers this past weekend. It's still the biggest thing on the planet. The parks are printing money. They got Star Wars coming, which is just going to knock the cover off the ball. People are already, you can't even get near the parks on those opening dates, so forget about that. So it's just everything's knocking it out of the park. The one albatross around their neck for a long time has always been ESPN, right? And now they have the ESPN Plus, which it seems to be doing all right. They're signing some pretty exclusive licensing deals for that. For example, I'm an MMA fan. If you're like UFC, you can pretty much only get the pay-per-views now through ESPN Plus. You can't go buy them through a regular cable. So you have to start paying the whatever it is, $6 a month, I think, just as kind of that's your ante to get into the game. So then you can go buy the $60 pay-per-view if you want. So there's a lot of things. And now there's talk of this Disney Plus launching. There's a lot of talk about some sort of combo deal coming out where you pay one monthly fee, you get ESPN Plus, and you get Disney Plus. You get access to a boatload of content, sports, and their kind of library stuff. And that seems to make a lot of sense. And when that goes live, plus on top of it, they're already yanking one by one all of the Marvel stuff off of Netflix, and that was a big driver for them. So they start yanking all that, and then the Fox properties and everything else that they own off of Netflix and onto Disney Plus or even onto Hulu. That combo seems like it's going to, shall we say, I wouldn't say take the legs out from Netflix, but certainly maybe take some of the wind out of their sales. And I mentioned they're already in the top 10 today. They're number 8, looking pretty heavy there. Also, I think, as I recall, the most biased paper we saw going in today. A lot of call action going up here in DIS. Speaking of calls, so let us know what you think, what you want for, listen, we're kind of trying things out with a little bit of a, stock of the day, stock of the week, call it what you will, kind of highlight it. Maybe we'll move it around. Maybe it goes in the trading block. Maybe it goes elsewhere. But we're trying to just figure out some new segments for you guys. It is 800 plus episodes after all. So if you guys have suggestions, what you like, we can get it more into the skew and things like that too, and volatility. We want to get in some other names here in the odd block right now too. But in general, some suggestions, ideas, hit us up. We do love to hear from you. We love doing what we're doing, but we also love adding new wrinkles for you guys. So let us know what you think as we move on into text. I know you're thinking Disney, the next name that immediately rolls off your tongue. Of course, IQV. Talking about IQVIA Holdings. I think that's pronounced right. IQVIA. I guess go IQVIA. I like that. Sounds kind of like ichthyosaur, the old dinosaur there. IQVIA Holdings, Inc. Ticker symbol, of course, IQV. Trading today, 137.07 off $1.77. A lot of sevens going on today in IQVIA Holdings, off about 1.25%. This is an American multinational company. Well, that says it all. Serving the combined industries of health, IT, and clinical research. So there you go. That should put aside all doubt of what they do. A year ago, this name was trading shy of $100, 98.17. They rallied all the way up. Looks like this year is where they're kind of seeing the upper boundary of that range, up to about 146 and change was their high. Looks like they hit it around March again and then again in April, and then they kind of came off a little bit again down to 133. And they've since kind of rallied a little bit up to 137, and we're kind of holding now at that upper portion of the range. So all that around to see. Let's see what we saw today. And our Eye of Sauron found us some calls. I'm going to come out and say maybe an overwrite, but it's kind of hard to tell. This gets back to what we were talking about at the options conference last week. It's kind of hard to tell what the hell's going on, and it's kind of hard to talk about liquidity in some of these names outside of the top 20, top 50, because things get a little wide. Case in point here, the June 145 calls went up in IQV 9,404 times today for $1.75. The market, when this trade went up, 75 cents at 3.30. A little wide. Just a wee bit wide. Again, market makers, kind of a decimated class. They can't really go out and show their best market in all these names and all the months of strikes, particularly something like IQV that trades pretty much on appointment, let alone when you want to do nearly 10,000 of them. Excuse me, OI on this strike, a paltry 700. This is all opening. So yeah, $1.75, 9,404 of these bad boys. 145 strike is kind of at the upper band of that recent range, 146, 52-week range, so that does support kind of the overwrite theory to it. Someone looking to harvest a little bit, and if they get up to that level, maybe they've been holding it for a while, they don't mind dumping the stock around that 146 and change level. So I'm going to go out on a limb and say that's probably it. There isn't really any earnings premium in this because earnings are on the 24th of July, so it's not an earnings trade. It's more, this looks like a little bit of a near-term premium override. Mr. Meatball, do you agree with that? Do you think that's the same, or do you think maybe they're buying? And what are your thoughts in general? You manage money, usually not in crazy esoteric names like this, but of putting up trades in markets that you could drive 10 trucks to them like this.
I mean, I'm a huge IQV fan. This is not the first time this guy has done this type of trade. They did the March 150s as an override a while back. There is a player that steps in and sells about this much calls just about every time. He was short in December. He sold in November. He sold December calls. He's done it a few times. So I think that this is a consistent player that owns a healthy piece of IQVIA. IQVIA? You think it's IQVIA?
That's what I went with. But
IQVIA?
IQVIA? I'm willing to hear many arguments to the contrary. When you spell your company IQVIA, it's coin flip. What the hell do you call it?
I like IQVIA.
IQVIA, I'm down with that. IQVIA.
Don't they compete with IKEA? You got IKEA next door.
I hear the IQVIA meatballs are delicious. So yes, check those out. Not quite Swedish. I think they go the Peruvian route, but they're delicious nonetheless. So there you go. IQVIA, whatever you want to call it. It looks like so this guy, you've been watching this guy then. Sounds like he's been overriding. Sounds like he may have a little bit of some wherewithal with the space. So in which case, looking to harvest a little bit of the old risk premium. Got himself done $1 off the bid. I guess that's pretty good. All things considered, it's just it's always interesting to see some of these markets and some of these more esoteric names and see what's going on out there in liquidity beyond front month at the money Apple, SPY, and that sort of thing. Speaking of not at the money SPY or Apple, let's go beyond a little bit, all the way out to Triple D, aka 3D Systems. Don't get excited, folks. 3D Systems, ticker symbol DDD. Of course, it's trading $11.10. Kind of unch on the day, off about a nickel or so. Not a huge day for them on the underlying side. This is the name that a year ago was trading pretty close to where it is right now, about 50 cents lower. Then it rallied all the way up to over 21 and change. Looks like that was, let me get that a little bit farther back. There we go. All right, all the way back. It happened in August. 21 and change, middle of August. Then it kind of sold off again like everything else did, hitting the nadir. I don't need to tell you when it was, right around Christmas Eve. And then kind of popped back up to 14 in late February. and then it's sold off again back down to kind of 10 or 11, and it's kind of been hovering in this range for the last month or so. So it seems like it's kind of trying to find its footing here. Let's see what we saw on the options side. It looks like some puts, in particular the main 9/2 going up for a quarter. This is another one, slightly wide, not as bad as the other one, but still on a percentage basis, not good. They were 18 cents at 34 when they went up 6,000 times for 24 cents. So 6 cents off the bid, probably a sale. A good buy if they bought them, but I'm going to go out on a limb and say it was a sale. Opening over there on Box. Our buddies over there on Box. Look for them coming on the network soon. I had a chance to catch up with them at OIC. They have earnings, by the way, tomorrow, so after the bell. So this looks like a little bit of some earnings juice maybe involved in here as well, which probably also leaning towards the sale category. So by the way, the lower end 52-week range is about 9 1/4. So that falls kind of in line. Night and a half puts for about 25 cents get you right down to that 9 1/4 level. So I'm going to go out on a limb. All of that tangential info to say they are probably selling these bad boys. Mr. Meatball, I think this is line in the sand trade. You think they're gobbling up? Think they're spooked?
It is a line in the sand trade. By the way, I went to the IQVIA website and found out that they're called IQVIA.
That is nowhere near. That is nowhere near as fun. IQVIA doesn't even make sense. You can't pronounce the first 2 letters and then the rest of the word phonetically. That's not how it works.
But that's what it is. It is IQVIA. They literally had the whole company go, "We are IQVIA," and so I will give it to them. They are IQVIA.
I refuse to allow that. You either spell it phonetically or you spell it, but you can't do this. You can't do half letters and then half phonetic. That's not how the language works. That's a conversation for another day. That's like the old Options Express days when they refused to capitalize the O. Drove me mad. But that's a conversation for another day. Go forth, sir.
All right. As I was saying, yes, it's a line in the sand trade. I agree with you 100%.
That's all you have to say. That's all I have to say on the show. I agree with you 100%.
I was more interested in the IQVIA.
I know you were.
IQVIA than I was the actual trade.
See, that just shows how ridiculous their name is. They have to have the whole company get there on the website and pronounce it for people.
Tell you what it is.
Yeah,
yes,
exactly. That's probably a sign you didn't really hit on the right name there. As we keep on rolling, let's see what we hit on. We have no idea. I'm going to hand him a hot mic and see what he says because it is Monday. It is time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, let's do it, listeners. He's had a week off. He's ripped. He's ready. He's rearing to go. Uncle Mike, sir, I turn the microphone over to you. I'm a little bit terrified, but nonetheless, sir, what do you got in store for us today, sir?
Well, you should be terrified. I mean, what's not to be terrified about?
IQVIA terrifies me, if that's how they pronounce it.
That's good. That's good.
You should be terrified of IQVIA. IQ. For sure. I want to talk today about, just to kind of add to a little bit what I was talking about in the trading block, of when you're really close to your target fill and you get out before your target fill, the advantages and disadvantages about doing such things. So let's say, for example, that you want to buy a call option. You can do this with spreads. You can do it with 2-legged spreads, 3-legged spreads, condors, 6-legged spreads, whatever the case may be. But let's just say we're buying a call option for right now for sake of simplicity. And let's say that you want to buy the call option for $1.20 and your profit target is $1.80, let's say. So right now you're going into the weekend, and let's say that that call option is trading $1.72 by $1.77. Should you get out of it, take the profit, or should you just let it ride because you want to be a disciplined trader and stick to your original targets? Well, I would personally say that if you're going into the weekend or if you have reason to get out early and disobey your original target, I say do it if there's reason for that. Now, here's what I mean. Whenever you're going against what your original trade plan is, I have it written in my trade rule books that I allow myself to break the rules if it means I'm taking profit early or getting out sooner for less loss. And here's what I mean by that. You get into trouble if, let's say, on that same call option that you buy for $1.20, you want to get out of at, say, 90 cents as your stop loss, let's say. And once it goes down to 91 cents, you're thinking, well, you know what? I think that
it'll still come back. It'll be okay. I think it's going to do well. If that's the case, I'm adamantly against that. I think that you need to get out at that point. And so in that instance, if it was at 91 cents, then I would be getting out of it at a sooner time frame and allowing myself to take a tighter loss in that case. However, let's say that it's going to the upside, and I talked about this a little bit in the trading block when I actually did this in real life last Friday. And let's say that you're not quite at your profit target yet. Well, how much more profit do you have? And in this instance, let's say that you're at $1.75, let's say, is what you think you can get filled at. And you're going to wait the weekend to get that extra nickel. Here's how you have to think of it at that point in time. Now, yes, you want to do your best to keep your trading plan intact, but is it worth $1.75 of risk to make a nickel? And I say in some instances it could be. So, for example, let's say that maybe there's another 2 hours in the trading day and the stock's just been rallying all day and it looks like it's going to continue to go higher, then yeah, by all means, let it ride. However, let's say that it's right before a weekend, and with weekends, you always have a lot of uncertainty in the mix, and you have no access to the market because they are closed on the weekends. If that's the case, then I think that's an instance to where it's time to give up that nickel, be happy with the profit, and then just have an understanding that you can go spend your weekend in cash. It's a pretty relaxing place to be, quite frankly. So the moral of the story for today's strategy block would be along the lines of, when should you keep a very strict and firm trading plan? And when is it okay to kind of maybe have a little bit of leeway in there when real world scenarios present themselves? And I say, when you are trying to be more conservative or trying to protect your initial trade, I think it's okay to stretch the rules a little bit. I did this past Friday, and it was very beneficial. Now, granted, keep in mind you have to be prepared for the fact that, let's say it's Friday afternoon and you sell that call option for $1.75, and then all of a sudden that company has a merger or has some type of big announcement the following Monday, then all of a sudden that call option's at $4. Well, then you're going to kick yourself. But have an understanding that it's much more pleasant to kick yourself in situations like that as opposed to when the stock goes against you and now you were a nickel away from profit and that call option's trading at 84 cents. So that's the way that I like to look at things when you're in a situation to where it's not the initial scenario or conditions that you had anticipated. Those are what I like to do for some of my rules when faced with situations like that. And that is the strategy block for the first one in May, I believe.
First one in May, saving it all up. Colin, I know you guys deal also with a lot of, obviously people calling you up, asking you a wide variety of questions on the active trader strategy desk. I assume a lot of them kind of comes along this vein of kind of entering and exiting these options positions. And any thoughts, maybe anything you want to add here as what you tell people when they call up and with these types of questions?
So when clients calling into particularly our desk, this is a very important concept that gets overlooked so frequently. It really is important to be, yes, it's good to have an exit plan in place that you stick to and stay disciplined to, but you still need to be flexible to that. If you don't hit the full target, but you're getting close, you should always be reevaluating and saying, look, based on what I'm seeing here, is it worthwhile for how much time is left in the trade? Just walk away with the profit that I have. In terms of closing out early, if you're getting close to that profit target, and essentially you're raising your probability. So we always encourage to reevaluate. And if you're getting close to your profit target, we always stress be flexible. You definitely have to be flexible because it might just be close enough where it's worthwhile to take it off. So I 100% agree with that, and especially, when you're in the context. Now, maybe on the loss side, we always say there's a reason why you set that. So if you make it specific enough of why you're exiting out, you probably don't want to be as flexible from the loss side, especially with selling strategies where, you're trying to get as many winning trades as possible and make sure those losing trades don't wipe out several of those winning trades that you have on there. But in essence, from the winning side, it's definitely a consideration that we always encourage. I think this topic is timely as well as it's such an extremely extremely important aspect to trading that people overlook, and they should definitely consider it.
Let's see what else people want us to consider. We got a little bit of time, so let's open up a little bit of the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. Last week we asked you guys on the network a question of the week. It was a big earnings week. A lot of big names on the docket, including 4 that we profiled for you: Google, Apple, GE, and Mickey D's. And we thought we'd ask you just quite simply, which one are you most exciting, most looking forward to trading options on for last week? The battle was hot and heavy, but the numbers have been tabulated now. And the winner was Uncle Mike. Can you hazard a guess which one won, sir?
Got to go with Apple.
Got to go with Apple. The fruit company did indeed pull it out. It was closer than I thought with GE for a little while there. GE was in there. They were in the mix. It was like 34, 38, and then Apple pulled away in the end. 44% to 31% for GE, 16% for Google, a.k.a. Alphabet, only 9% for Mickey D's. No one loving a little bit of fast food on there. So Apple pulling away with it, and the numbers again today dominating the top 10. Clearly, Apple, you guys have it on the brain. A bit of a, quite frankly, a lackluster number from them, and yet the market liking it. So apparently you guys were right to focus on all things Apple. Let's see how they're looking today. Off a paltry 4.3 handles, a little over 2%, about 207.5. Still well north of that 200 level, and of course, well north of that 150 level that everyone was wringing hands about selling puts on just a few months ago. Seems like yesterday. Let's see what you guys got on the brain here. Son of the Algos wants to know if do we have any Spock lookalikes? Not sure, not much on the Vulcans really here on the show. I could maybe see a few Cardassians, maybe a Klingon or two. Uncle Mike, maybe Uncle Mike's got a little Spock to him, but not a lot of Vulcans on the show, unfortunately. So there you go. Hopefully that doesn't upset you and you unsubscribe right away. Maybe a Ferengi or two. I could see Sebastian being more labeled on the Ferengi side, but not a lot of Vulcans here, unfortunately. All right, let's get to a serious question. Serious question from Blues. Blues wants to know, this is for you, Uncle Mike, so I guess the rest of us can kind of just sit on our hands and relax. He wants to know, does TUSAW do long-term collars on more than just silver? So he wants to explore the exciting world of your long-term collars, Uncle Mike, and do you do any others outside of silver?
Yeah, at times I do. So typically more of those are along the lines of a one-off. Like if a client really likes a stock, but they're concerned with it, we'll do 1 and 2 year collars on them, but typically more along the, nothing seriously systematic with them in a group trade setting, but just more a few one-offs here and there. I think that it's a very valid strategy if you want to just kind of set it and forget it type of thing. And occasionally you do get some opportunities that present themselves in that if a stock rallies, you can roll up a put, and it's usually not that expensive to do so. And then the stock can go back down. Then you can roll the put back down. You create a quick short-term profit off of what was initially a long-term trade. And there's really not a lot of risk in doing that. Of course, you're going to miss out on a few pennies here and there if you're wrong on it. But I like them in that you set them up to where you set it and forget it. But if you do get a really large movement one way or another, you can create some opportunities. The other way with which I'll use them is the skew fund, like on Google, for example. If you have over 6 figures that you can do this with, we'll do these with Google, and that you do get a pretty decent call put skew over a longer time frame. Not necessarily just Google, but a lot of movers and shakers. Amazon's another one that it can work with, and some of the FANG stocks. I haven't looked currently in the last couple of weeks on this, but typically whenever I run into a situation to where someone wants to have that type of exposure with that type of protection, the FANGs are usually the first stop that I will look.
So FANG long-term collars for Uncle Mike. Mr. Meatball, Mr. Colin, you guys have any thoughts on longer-term collars? Do you like this? Is this a strategy you guys use, or not so much for you guys?
I like a longer-term put with short-dated calls a lot. I think that you can, especially when skew gets really flat. I'm in. If I can collar and get a credit on it, I will do that all day. That means skew is out of whack, and you should do it. So I'm always paying attention for collars.
Yeah, and you mean a credit? You mean like over time? You're not going to get the credit initially. You're going to write that call.
No, not if you do like a long-term put with short-dated calls. But
that
what
would be
I will
crazy.
look is
That would be a crazy name.
If I can go out 6 months and do the regular collar and get paid for it, then I know skew's out of whack, and I should absolutely go long put, long stock, short call.
So you're saying if the collar gets crazy in that same month, like the quote-unquote zero cost, but now credit collar. Credit collar.
Yeah, if you can do a credit collar, you should do it.
That should be a term, the credit
collar.
That's
not, you know what I mean.
I know what you mean, credit collar. Colin, are you also a fan of the old credit collars, or in this case, for the question here, Blue's question, long-term collars? Do you like those?
I would say long-term collars are more of a specific situation, and this is just in the viewpoint of taking a look at what you're trying to accomplish from the trade. Are you willing really to stay in for those longer-term trends? Just remember, if it is something you're looking to stay in, when you're utilizing that, you're capping that upside. So really make sure it aligns with what you're trying to accomplish from the trade. That's why I always say something like that is more specific to a certain outlook that you have.
Yeah, people always fall in love. The problem I have with collars, people fall in love with those zero-cost ones, and then they're putting them on. And, whenever you're lining them up that way, you're doing it for premium, not for the best interest of the position. And things always get wacky. You get a put that's like 18% out of the money. You get a call that's like 24. It's not that useful. I like the other way we're talking. Longer-term collars, if you could take a longer-term put. And the studies vary. A lot of the studies, OCC just put out a new one. They've done a few ones in the past, OIC, where they found optimal to be around that 6-month time frame. On the put side, and then the calls, obviously monthly, weekly if you can handle the gamma and the rolling every week, but monthly definitely. And then you do 6 monthly calls all the way up to the put, and hopefully by that point you get a nice little juicy credit on the deal, and you've got some protection along the way, and everything else is good. And the nice thing about doing shorter term calls, you can adjust if the underlying continues to roll. You can keep riding higher and higher strikes, so you're not getting called away. So there's a lot of good reasons to do it that way. I'm a fan of that. I don't know about 2 years. That's not really my bag, but others like it. Uncle Mike likes it. Sounds like Blues. You like it as well. As we keep on rolling to our final segment, it's time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, well, obviously we got a trade war on the brain this week. The will they, won't they, what will he tweet next kind of deal that we've all kind of been living in since 2017 dawned, and then volatility went away, then came back again. So it's been interesting roller coaster to watch here. The rest of this week on the things we can quantify side of the spectrum. I mentioned Tyson today before the bell, so that already happened. Hertz after the bell. Later on, we got good old Anheuser-Busch Inbev. Tomorrow, Crocs. Good old Crocs. A storied name back in the early days of the Options Insider. The dawn around 2007. The first time we ever broke 1,000 page views in a day, which seemed like so many to me back then, was when we posted unusual activity on Crocs. So there you go. You may not like the sandals, the footwear. They hold a special place in my heart there because they were one of the first big drivers of volume for us back in the day. Lyft and EA also on Tuesday after. Wingstop, if you like your wings, you can get your wings after the bell on Tuesday. Wednesday, Chesapeake, a name that's been on, Chesapeake Energy, been on our odd block quite a bit. They're popping off. Coty, also an active one these days as well, COTY. Wendy's, you got Roku, good old Disney. We think we mentioned them once or twice today after the bell. Thursday, we've got Sonos, makers of those fancy speakers, the Yelp, Zillow, GoPro, having some problems in that space of late. And Friday, got good old JD and Marriott, Tribune, and Viacom. All that before the bell. So an active week. And then, of course, Uber rounding it off with their IPO on Friday as well. So a lot to sink your teeth into this week. Let's go back around the horn the opposite way. Let's start with Colin. Colin, sir, what are you watching for the rest of this week?
Yeah, it's really going to be focused on the trade talks that are going to be happening on Wednesday. That will kind of maybe clear up some of the air. But also you got some economic data, things like PPI and CPI that are coming out later on this week. And something really short term I'm really watching is how the S&P is going to be reacting with it. It's right now sitting right around its 20-day moving average, especially with the VIX popping up like it has. I'm going to be really watching to see how it reacts off this 20-day to see if this is going to bounce or is it just going to give way. So those are really what on my radar, especially the S&P.
And Mr. Meatball, same question for you, sir. What are you focused on like a laser for the rest of the week?
Oh, I'm focused on all sorts of interesting stuff, but we got earnings. We have China. We have Disney earnings, like I said. Lyft earnings tomorrow. I'm looking forward to that one. How much did Lyft make? Should be a lot of fun.
Spoiler alert, probably not a lot.
No, probably they lost money, believe it or not.
Probably they did. Have you seen all that data now? Like all the IPOs now, they're rivaling 1999, 98 for how many companies are going public with $0 in earnings.
It's crazy. It is crazy. Although I will say I do like, of the kind of hyped ones, Pinterest is actually interesting to me. That is one that I continue to have on my radar. Lyft not as much. And I'm going to be watching this S&P. We're right at 29.20. We're $4 higher than we settled on Thursday night. Will we get to unchanged today? That is what inquiring minds want to know. In addition, I have 4 baseball games to manage this week. That is also what I'm up to this week.
I did my duty yesterday. I coached flag football for the beginning of the season to a triumphant victory. The Avengers avenged our last season. 35-6 was our opening game. So things are looking good for us.
Nice. Good
things
job.
are looking good for us here. I have to say, I think it was all due to the deft coaching. The kids played no part in it whatsoever. All right, so good stuff there. And Uncle Mike, last but not least, someone who knows also a thing or two about coaching some football. Mr. Uncle Mike, what are you watching for the rest of this week, sir?
Well, no flag football, but nonetheless, I think that, it's funny you bring up the football thing. A couple of years ago, I made China one of our key audibles for my son's football team for quarterback sneak. And then whenever I'd yell China, we'd do a quarterback sneak and we'd run it a lot after a big play. So as soon as that happened, it seems like we're talking about China on the show all the time. So, but anyway, what I'm watching for now is just to kind of add to what Colin said about the S&P. I'm not so much the 20-day on my side of it, but I'm also watching to see if we can hold 2,900 on that is somewhat of a key number. But also 3,000 is a large number as well, and it's right around the corner. So watching that in addition to earnings as well as China and everything else.
Everything else covers a lot of ground. That's kind of what you have to cover these days if you're watching the markets, listeners. Unfortunately, that music means we've come to the end of another epic sojourn through the world of options. And oh, how epic. We talked Disney, we talked all sorts of things. We talked entries and exits, long-term collars, we talked IQVIA. Worst name. I have to contact them and tell them that's terrible. We talked about volume, we talked about a bunch of other stuff, talked about Apple, you name the name, VIX. We talked about it here on the show. So yeah, let us know if you have suggestions, ideas, maybe like that new little stock of the day, stock of the week kind of segment. Kind of just trying new fun stuff. But don't worry, if you don't want to leave, you don't want to go home, you want more content, stay tuned. Go get a beverage, take a nice relaxing break, come back in exactly 30 minutes. We're going to be talking crypto active, crypto derivatives, a lot of hot stuff with ErisX. Spoiler alert, they're one of the big players in the crypto derivatives exchange. A lot of big names behind these guys, a lot of big money behind these guys. So it looks like they're going to be leading the dance pretty soon. We're going to be catching up with them, seeing what the heck's going on in the world of crypto derivatives, particularly in that rally. That's exactly at 1:30. So come back. Won't be able to stream in between, unfortunately, because we have to do some rejiggering here in the studio for guests. But we'll be coming back live again at 1:30. So stay tuned for that. You listen on the podcast. Just sit back. You're going to get it along with all the other good stuff we have coming your way from OIC. Speaking of good stuff, let's go back around the horn and see what good stuff they have working for us. Let's start in the land of Fidelity. Colin, if people are intrigued by what you and the rest of the gang have been talking about here in Fidelity Land, they want to learn more. Maybe they want to contact you directly. Where should they go? What should they do?
Yeah, so we have information available on fidelity.com/options. A lot of information in there, including information about our desk. It's called the Trading Strategy Desk. So at any point in time you have questions or want to have a strategy discussion, contact us by utilizing the 877-907-4429. and that's to set up an appointment with someone from our desk or even me. I'd love to speak with you and be able to through your strategies with you.
There you go. Check them out. And as always, if you want to kick the tires and light the fires, Fidelity.com/options. It's pretty easy. It's all in one place. You can find it. You can go there, see the prices, see the tools, see the platform, all that good stuff. Fidelity.com/options. Tell them we sent you. They'll be super excited. All right. And let's go around the horn. Uncle Mike, sir, if I want to continue talking long-term callers or anything else, where should I go? What should I do, sir?
By all means, go to my website, stcharleswealth.com. And then sometime, don't have a date secured yet, but sometime within the next month or so, I am going to be having another St. Charles Wealth Management, St. Charles Investment Club meeting at my office. They are a lot of fun every time. No one has ever left one saying, this really sucked.
Ooh, that sounds fun.
And so with that...
Is there free beer?
So
I'll be there if there's free beer.
I'll say, so it's funny, when we were trying to sell our house one time, a few years back, people said, well, is there free beer to go to your open house? I said, yeah, all the free beer you want at the closing. So that's where it's at.
There you go.
But yeah, stcharleswealth.com.
I'm looking more towards the free Skippies and Gyros and lemonade.
stcharleswealth.com.
But there we go. Uncle Mike, well done, sir. Check him out at his next venue, next big live event. Speaking of live events, Mr. Meatball, if I'm dying to meet you and the Rock Lobster and all sorts of varied and sundry folks in person, where should I go? What should I do, sir?
Yeah, if you want to come to Chicago, hang out with me, Andrew, Mark Longo, maybe Mike Tusaw, we can get him out of his hole. You can meet BigBlondeHair.com. You can meet the Mrs. Options Insider Radio and debit and credit spreads fame.
I have not promised Mrs. Options Insider Radio. That's
Mrs. Options Insider Radio.
That has not been promised at all, sir.
All right, but you're gonna want to come to Chicago. Go to optionpit.com and sign up. And I believe, Mark, we've got some email. You're gonna put an email out or something around it as well. But come visit us and learn to trade options like the brilliance that is the men on this show.
There you go. Check it out, optionpit.com. We will put out an email so you can find out more information about that, as well as head over to optionpit.com. Click register for that event if you're going to be in and around Chicago. It's a fun one. I've been to it a few times. It gets pretty deep in the weeds, which I think you guys like. And if you're listening to a show like this, listening to our network. So check it out, optionpit.com, to learn more. On behalf of Mr. Meatball and Uncle Mike and Colin and indeed myself, I thank all of you for downloading, streaming, subscribing. If you're listening live, we love you. Sorry we couldn't do too much live last week, but now we're back and we're coming at you with a double header today. So stay tuned, go get a beverage. Come back in about 25 minutes now for a little bit of crypto derivatives talk. Should be interesting. Otherwise, we'll see you back here on Thursday for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.